All right, so with this big bank stuff that's been going on and everything like that, you already know SVB Bank pretty much collapsed and everything like that. We're really all kind of wondering, where are these people moving their money? A lot of people are concerned, a lot of banks are falling. And if you feel like you can't take your money out of your bank, you're not likely to put your money into a bank because you don't feel your money is safe. And if you're rich and you have millions of dollars, you need somewhere safe to put your money. So this next article that we're going to go into is pretty much about to be about where wealthy investors are actually putting their money as after this, SVB collapse and everything like that. So let's go ahead and get into it and see what's going on with that. Now it says, of course, where wealthy investors are putting their cash after the SVB collapse. Now it says wealthy investors and family offices are moving more of their money out of bank cash balances and into treasuries, money markets and other short-term instruments, according to wealth advisors. High net worth investors typically keep millions of dollars or even tens of millions in their bank accounts to cover bills and unexpected expenses. Makes a lot of sense. You want to keep your money safe, throw it in a bank, everything like that. Their balances are often way above the 250,000 FDC insured limit. If you guys don't know, normally the FDC insures about 250K worth of your money when you put it into a bank. Now, to the average person, that means literally nothing because they're not going to have $250,000 in their bank account. But let's say you got $3, $4, $5 million, then that can start becoming a real concern, because it's like, okay, only 250K is insured. What if something happens to the bank? What if the bank collapses? What am I going to do? How is my family going to eat? How am I going to pay for these mansions? And you know what I'm saying? These trips to Dubai. How am I going to pay for these trips to Dubai if I can't get access to my money because the bank has been trading it on the stock market and lost all of it, through the crash, and everything like that. So this is a big concern for rich people, and for people who are not rich, yeah, probably, you probably don't care too much because you wouldn't have your money in a bank like SVB in the first place. Now it says following the collapse of Silicon Valley Bank and potential cracks in the network of regional banks, wealth advisors say many clients are now asking fundamental questions about how and where to keep their cash. Makes sense. I'd be doing the same thing if I had $250,000. Now it says, over last weekend, there was a lot of worry, said Michael Zerner, managing partner at WE Family Offices, which advises wealthy investors and family offices. The questions that I was getting directly on Saturday and Sunday from clients was, how is my cash deployed? Is it actually on the balance sheet of the banks? That's the thing. And we learned a lot about this through Sam Bankman-Fried. What banks are supposed to do is you put $1 in, they're supposed to match your dollar. So if you put $1 in, there's supposed to be $2 in the bank so they can do whatever they want with their dollar. And if you need to pull your dollar back out, you can pull your dollar back out, and then they're allowed to grow their wealth through the matched money that they have. But what a lot of banks are doing, and that what they don't really tell you, is that they're trading your money. They're literally trading your money on the stock market. They're investing your money in all types of businesses and things like that because they assume that you're not going to pull out your money. But what happens is when things collapse in the way that they did, people end up going, oh shoot, like maybe I should pull out my money. All these other people tried to pull their money out of this bank and they couldn't even get to their money. And people get real mad when they don't have access to their money. So, what I'm saying, and everything like that. So it says all of these are very sophisticated, very successful investors and families who just never thought about that question before. If you always assume that a bank is a place that is going to, hold your money under the mattress, like putting your money in a mattress, then you're going to be very surprised when you see other people or possibly even your friends come to you and be like, bro, you wouldn't believe what happened, man. I tried to take my money out of Bank of America and they told me they didn't have my money. Bruh, the last thing you need to do if you want to make a rich person mad, tell them that they can't access their accounts. That is the fastest way, I assume, to make a rich person mad. You feel me? Now, let's see. They said it was a wake-up call. It was a large wake-up call that we all should have kind of learned from that whole crypto disaster. Now, adds Patrick Dreyer, managing director at New Edge Wealth. This was a real wake-up call to the high net worth individuals who have cash around. The SVB crisis has only accelerated a broader push by wealthy investors over the past year to move cash out of bank balances and into treasuries and money markets. With a rapid Federal Reserve hikes, treasury and money markets can now offer a 4% or a 5% risk-free return, often double the yield on a savings or checking account. As a result, wealthy investors and family offices have been moving all but a small portion of their cash balances into higher yielding cash like investments, which are typically not on the balance sheet of banks. At the same time, many big investors begin to pull money out of stocks and other investments due to concerns over rising rates and a potential recession. I'm telling y'all all the time, you might as well just consider this a recession. We're in a recession, people. Just think about it like that. We're in a recession, people. Normally, it's the recession happens, and then 6 months later, people are like, oh my God, it's a recession. No, the recessions happen. Save your money now and everything like that. So when that happens, you're like, okay, I've been saving money. You feel me? I don't know why I did that. Now, it says for so many years, cash was just not an interesting investment. It was paying zero, so people weren't really paying attention to cash. Over the last year, as interest rates came up and the fear of a recession kicked in, a lot of families started to take some of that risk off the table, and it went into cash. And so cash from an investment perspective has all of a sudden become a much more important part of the portfolio. Really, they should be investing in something like gold or something that, some type of staple that, will kind of hold value. Invest in toilet paper. Toilet paper will always be around. It's not going anywhere anytime soon. I don't care how broke you go, or how broke you get. You're still going to need toilet paper, you know what I'm saying? Maybe we should just start hoarding toilet paper, you know what I'm saying? We start filling up our treasuries with, instead of gold, we start filling it up with toilet paper, hand sanitizer, you know what I'm saying? Soap, things like that. Rice, beans. Not a bad idea, though, honestly. Now, it says Zuner advises investors concerned about their cash deposits to ask their banks two basic questions. How is my cash being deployed, and is it on the balance sheet? If the cash is invested in treasuries and other financial instruments, it is likely not on the bank balance sheet and therefore not at risk in the event of a bank run. So he says, what you want to know is, to the extent is that if something happened to the bank, do I have access to my funds? I mean, let's be real here. That is the question everyone is asking. If the bank is to go down, if the bank is to go under, y'all still got my money though, right? Like if y'all dealing with lawsuits, all of this, y'all still have, a basically like a storage unit filled with my money and everyone else's money. Now it says some big investors have been moving away from banks entirely, shifting their cash to custodial accounts at brokerage firms and firms like Fidelity and Perishing. So basically taking their money completely out of banks and putting it into things like hedge funds, TD Ameritrade, Fidelity, things like that, where they do definitely trade your money and everything like that. But, they haven't been dealing with these type of collapses. And if everyone gets scared of these banks and they go to their banks, they won't be thinking about, places like Fidelity and TD Ameritrade and, these other firms, firms like that. By and large, our clients were holding their assets at Fidelity, which is not a bank, so it was very comforting to them, he said. Now, as far as loans and mortgages, it says wealthy investors and family offices will continue to rely on banks for loans and mortgages, but the strategy of banks requiring wealthy clients to give them deposits or primary banking relationships exchanged for loans may be ending. So at this point, it's like, hey, the banks may have the normies, you, me, and everything like that. We'll still be feeding money into the banks. But if too many rich people are leaving these banks, which are really their bread and butter, you know what I'm saying? One wealthy client having $5 million think about it, is pretty much how many people that, may have 5, 10, 20,000, 30, $40,000 in their bank account. That person with $5 million is essentially doing the same work for the bank as probably hundreds of people at that point, So let's see. It says loans and mortgages. Wealthy investors and family offices will continue to rely on bank for loans and mortgages. So they'll still be going to them for loans because the banks are the people that have the money. But the strategy of banks requiring wealthy... Oh, okay, got you. It says clients also understand that they can get usually well-priced loans from multiple banks and don't have to put their cash deposits at risk. If you guys don't know, rich people don't use their own money for anything. When they invest into businesses or create businesses, they do not use their own money. They go and seek funding, and then they use that funding to fund their businesses. Rarely ever do rich people actually go into their cash deposits. That's a big thing that a lot of rich people think is a very common knowledge to them, but to, I guess, normal people, that's not the way that we think. If you're a person, you have $20,000 in the bank, you're normally thinking, okay, I'm going to use some of this $20,000 to invest into my business. You're not thinking about going out, finding investors, going to a bank for a loan, and everything like that. And that's also what protects the rich a lot of times, because then their money isn't necessarily tied to their personal finances, but that money is essentially the business's money, kind of like having an LLC where somebody can't, sue you and your family directly, but they have to sue, the business, and you own the business. It's a form of protection in a way. Now it says, I think families are realizing that there are 4,000 banks in the United States, so someone will lend them money when they need it. Yeah, sounds about right. So let me know what you guys think about this with the banks and everything like that. Do you guys also, I want to know, do you guys think that maybe the average person, obviously they shouldn't have too much concern about the bank collapses as much as a rich person, but do you guys think that we should start having this mindset, and looking more into the wealthy elite, how they acquire the money to invest into their businesses and everything like that, and the way that they move money? And I just want to know what you guys think about, this whole thing with SVB collapsing, other banks collapsing as people getting scared and going to, pull their money and everything like that. But it is interesting, and I think it will really help a lot of us out to be informed and kind of see, okay, so what are the wealthy elite doing? How do the wealthy elite think when this type of thing happens? How quick are they, on it? How quick are they moving to make sure that their money is protected and everything like that? I think that can be good for anybody, no matter what class you are, to always watch. They're basically like, if you're like a person playing high school basketball, it's good to watch the pros. They're the pros, so it's good to see kind of how they move. So I kind of wanted to, elaborate on that with you guys and everything like that. So definitely like, comment, subscribe, and everything like that. And, you guys all, still have a great day. But we're still continuing because we're about to talk about Donald Trump and everything that's going on with that. But I'm going to finish up this beer real quick. I'm going to go grab another beer because, as you guys know, this Donald Trump is about to be juicy. We're about to break down the whole nitty gritty from beginning to end, and pretty much go through everything CNBC has covered, throughout the entire day. Do I know if Donald Trump is actually going to go down? I'm not sure, but we'll see. Let's get into it.